But let's take it straight to the market opening now. It's very, very flat.
Another day when the mid-cap and the small-cap index is under severe pressure. Yeah. It's a sharp, sharp cut that you're staring at for the mid-cap index. We're now down about 700 points, a little less than that. Been in the red all through the trading session.
Well, hello and welcome to Markets Today. I'm Sonia Shenoy and these are all the top headlines for the day. First up, the Sensex slides over 800 points, falling below the 65,000 mark. The Nifty loses over 250 points to end at its lowest level in 2 months. Midcaps get battered, with the index losing 3%. 8 lakh crore rupees in the market capitalization wiped out in what has been the worst single-day fall since January. Kotak Bank tanks in trade. The RBI's approval of Ashok Vaswani, an outsider as CEO, surprises the street, which had been expecting an internal candidate to succeed Uday Kotak. A former Barclays banker, Vaswani's technology-focused global exposure is likely to have tilted the scales in his favour. ICICI Bank was under pressure despite a good showing in the second quarter. Return on assets on a quarterly basis came in at an all-time high. Asset quality improved with gross and net NPA ratio in the lowest in 9 years. Deposit growth is the best in 10 quarters. And BSE ups the transaction charges on the weekly contract for the Sensex in a bid to make the business viable for the stock exchange and partially bridge the steep discount to peer NSE. Amber Enterprises slides on failing to turn profitable and Laurus Labs sinks on missing expectations. But Credit Access Grameen leaps on revising up its guidance, and IPCA Laboratories gets a boost from a US FDA clean sheet for its unit after a hiatus. Well, here's the lineup of what we have in store for you in Market Opinion. We have Sunil Kaul, APAC Equity Strategist at Goldman Sachs. In Big Corporate Voices, Sandeep Bakshi, the Managing Director and CEO of ICICI Bank. Well, let's start with the market action now. The Sensex today was in, deep in the red through the course of the day. It ended down over 800 points. The Nifty lost over 250 points as the market started the week with a big sell-off. The midcaps got battered in trade, with the index losing 3%. All in all, stocks on the BSE saw their market capitalization go down by 8 lakh crores. This is the worst fall since January. Prashant is here with the market wrap. Prashant, over to you.
Completely down and out day for the markets today. No place to hide, really, that kind of a session. So Nifty will come up on your screen, down about 1.3%. Selling intensified in the last 45 minutes of trade. Similar is the case with the Nifty Bank, which also sold off hard. Now, the last portion of the selling came through right after, the selling started right after the US 10-year hit the 5% level, the first since 2007. And that is the global risk-free rate around which most of the financial assets are anchored one way or the other. And of course, the fear is that the reasons behind, the both technical and fundamental reasons behind the rise in bond yields in the US will remain valid, operative for the next couple of months. We heard from Fed Chair Powell last Thursday, and he doesn't think that financial conditions, and I quote, are too tight. And the fear is that rates here, perhaps even higher, will stay higher for longer. Broader markets, right? Mid-caps and small-caps had it even worse. Mid-cap index down 2.6, small-cap index selling off even more. And that's where bulk of the problem was. So this is the largest selling for those two indices since the 12th of September, where those indices sold off 4%. 10:1 declines to advances. Market breadth was very bad. Lots of actively traded stocks, well-owned stocks, down between 10 and 15%. I'll get to stocks in a bit. Earnings in the margin have not been all that great, right? So in recent memory, Laurus, Havells, Emphasis, Kajaria, Voltas, Astral, disappointments really compared to consensus expectations. And of course, positives coming through only through in Bajaj. I mean, that was a big surprise. And of course, Polycab at the margin also beat expectations. Remember, stocks have done very well. And that's the basic backdrop against which these stocks have corrected. So the top worst hit losers on your screen: Laurus, GMDC, SJVN, IRB, Indiabulls Housing. Amber sold off aggressively. These banks, Bank of India, Central Bank, ITI down 10%, RCF, PNB Gills, Alembic Limited. There was BEML, which was down sharply. Iron Exchange down 10. Schneider down. Sugar stocks, Dhampur, Dwarikesh down. And something like a Star Cement sold off as well. Well, tomorrow is a market holiday. And I think we'll watch what US markets do very, very closely. Global markets, really. And even there, I think what will matter the most is US bond yields. We'll have 2 days of those reactions to react to when we come back on Wednesday morning. Back to you.
All right. Thanks a lot, Prashant, for that. So indeed, it was a very big disappointment today. But let's get you some market opinion. Sunil Kaul, the APAC Equity Strategist at Goldman Sachs, said that macro headwinds like higher oil prices, stronger dollar environment will definitely affect foreign flows. He believes there is robust domestic inflows in the mid and small cap space. Listen in.
For India's case, we do have support from the domestic flows. But in general, I think if you look at the FII flows over the past couple of months, we have actually been seeing sell-off across markets, right, in the last couple of months. And a lot of that, I think, is to do with the fact what's happening globally, right? I mean, if you, for example, looked at the macro headwinds of higher oil prices, strong dollar environment, US 10-year, as I mentioned, at 16-year highs, I think that has impact on foreign flows, and we're already kind of starting to see that in the last couple of months. The broader market is obviously up 15% from the lows, but the real action has been in the mid and small caps, right? I mean, they are up like anywhere between 35 to 45%, even at the index levels, and obviously very strong moves at the stock levels. And part of the reason is because of the domestic flows, because what we have been seeing in the flows over the last many months is that you're seeing very strong inflows in mid and small cap mandates.
All right, moving on to the second headline today. Kotak Mahindra Bank slipped over 1.5%. The RBI approved the appointment of Ashok Vaswani as the new CEO and Managing Director of Kotak Mahindra Bank over the weekend. Vaswani's tenure will begin from the 1st of January. Abhishek is here to tell us more about that. Abhishek, tell us about Ashok Vaswani. What was the reaction that we saw on the stock, and what could this mean for Kotak Mahindra Bank?
Ashok Vaswani's appointment as the MD and CEO of Kotak Bank has come in as a surprise, as most expected an internal candidate to take over. Let's take a look as to who is Ashok Vaswani and the implication of this move. First, who is Ashok Vaswani? Ashok Vaswani is a chartered accountant and a company secretary with executive education from Stanford. He's a career banker of 35 years who has served as the CEO of Citigroup's operation in the Asia Pacific region, later as the CEO at Barclays Bank in the United Kingdom, demonstrating his leadership in a prominent global financial institution before leading Barclays' global consumer, corporate and payments businesses, indicating his expertise across various segments of banking. At present, he is the president of Pagaya Technologies, which is an artificial intelligence fintech company with operations in both the United States and Israel. But why is his appointment such a big surprise? Now, it was widely anticipated that the top job would go to an internal contender, and there were two names seen in the running. Shanti Ekambram, head of consumer banking, and KVS Manian, president of global transaction banking. But where does Kotak Mahindra Bank stand today, and what does Ashok Vaswani have to contend with? Let's take a look. Kotak Bank has a strong retail franchisee and a significant market share of more than 2% each in deposits and advances. It has a lower stress level when compared to its peers like SMA or restructuring. The key challenges include addressing the declining low-cost deposit share and coping with the emerging competition from fintechs. What is Ashok Vaswani expected to do to address the challenges? Now, here's what leaders at the bank have to say. The bank's founder and former CEO, that is MD and CEO, Mr. Uday Kotak, says that the aim is to bring a global Indian home to drive Kotak's and India's future. Now, Prakash Apte, who is the chairman, says that he is confident that Vaswani will accelerate change and drive growth. While Deepak Gupta, the present MD and CEO of the bank, says that Kotak's vision to transform into a tech-enabled, consumer-centric financial institution. But analysts tracking the bank have made some observations and flagged some concerns on this surprise announcement. First, they see the choice of CEO being driven by the need to push for a tech transformation in the bank, which is in line with the industry trends. However, Vaswani's limited recent exposure to Indian ground realities could actually be a drawback, as the banking landscape in India is unique. Convincing the current team to embrace the change may also be a challenge. Vaswani has a limited runway as CEO, considering there is an age cap of 70 years in the banking sector and is already 63. Overall, the banking industry will be closely watching the transformation or the transition under Ashok Vaswani's leadership of Kotak Mahindra Bank, as the bank aims to stay competitive and adapt to the evolving financial landscape.
Okay, thanks a lot, Abhishek, for that. Staying with Kotak Mahindra Bank, the bank reported a strong second quarter performance over the weekend. Net profit and net interest income both met street estimates. The asset quality remained steady on a sequential basis, and the slippages came in higher as compared to the previous quarter. Well, the third headline today, ICICI Bank gained 0.5% on the back of its second quarter results. The company's net profits and net interest income came in above estimates. Abhishek is back with us with the report card. Abhishek, over to you.
ICICI Bank records have galloped in Q2 FY24. All-time high quarterly ROA of 2.41% and ROE of about 19.1%. You take a look at the subsidiaries quarterly PAT, ICICI Pru, ICICI Sec and ICICI Home have had all-time high in terms of quarterly profits in Q2 FY24, and that has helped the subsidiaries also to report the highest ever quarterly profit. Gross NPA ratio and net NPA ratio are one of the lowest in last 9 years or even more at about 2.48% and 0.43% respectively. So deposit growth of 18.8% YOY is perhaps the best in last 10 quarters, and loan growth of about 5% sequentially is perhaps the best that you are seeing in last 6 quarters. Overseas book, the net interest margin over there came in at 1.56%. Now this is the highest net interest margin in overseas lending business that they have in last 7 years or 28 quarters. Unsecured book that continues to rise, and it is at about 20.75% of the total loans, which is the highest ever that they have seen in last 24 quarters or even more, and this has helped the net interest margin as well. 11-quarter low in terms of various stress like restructured book at just 0.32% and annualized slippage ratio of 1.69%. On the flip side, the CASA ratio at 40.75% versus 43.3% is perhaps one of the lowest that you are seeing in last 35 quarters, and CASA per branch that I've calculated is the lowest in last 9 quarters also. Ashok Vaswani's appointment.
We see many opportunities to drive risk-calibrated profitable growth. We believe our focus on customer 360, extensive franchise and collaboration within the organization, backed by our digital offerings, process improvements and service delivery initiatives, will enable us to deliver holistic solutions to customers in a seamless manner and grow market share across key segments. We will continue to make investments in technology, people, distribution and building our brand. We will remain focused on maintaining a strong balance sheet with prudent provisioning and healthy levels of capital. The principles of return of capital, fair to customer, fair to bank, and one bank, one team, one ROE will continue to guide our operations. We remain focused on delivering consistent and predictable returns to our shareholders.
Okay, let's step into a quick break on that note, but stay tuned. We'll be back with all the other top headlines that we've been tracking for you. Welcome back. You're still with us on Markets Today. Let's go to the rest of the headlines that we're tracking for you. The fourth headline today, the Bombay Stock Exchange has raised its transaction charges on the equity derivatives segment. The new fee structure will come into effect from the 1st of November. Surabhi is here with the key highlights. Surabhi, over to you.
What they've done is they've increased transaction charges on equity options. Now, this is only for the Sensex 30 weekly contracts. Earlier, they were charging 500 rupees as a transaction rate across different equity options of different values. Now it's a slab-based tariff where if the transaction value is up to 3 crores, there will be 500. If it is between 3 to 100 crores, it is 3750. And as the volume increases, the transaction tariff goes down. This is still 25 to 40% lower than NSE. Now with this, there is scope for further increase when you compare it with NSE, and the brokerages have a view that with this there will be a 5 times jump in their tariff revenues. Now IIFL estimates a 5 times jump in their tariff revenues. Also, BSE was earlier incurring losses on its equity derivatives volume, but now with the increase in tariffs, they estimate a 45 to 50% net contribution from this tariff alone. And on back of this, they've upgraded their FY25 and FY26 EPS by 25 and 35%, and they have a buy rating with a target price of 2,000.
All right, well, the fifth headline today, IPCA Laboratories surged close to 7% after it got a voluntary action in classification for its Madhya Pradesh manufacturing plant from the US Food and Drug Administration. Ekta is here to give us all the details. Ekta, over to you.
Well, yes, definitely a boost for IPCA Labs because the US FDA has classified their Ratlam facility, which manufactures APIs, as voluntary action indicated in its establishment inspection report. Remember, this particular plant was inspected in June of this year and was issued 11 observations. It already has an import alert pending since 2014-2015, along with 2 other plants of IPCA Labs. So now with an EIR, with a VAI, which probably gives the green signal for them to manufacture from that particular facility, indicates that there is a likelihood that this import alert is now lifted and they can manufacture completely for the US markets from this particular plant. It is positive for them because, like I mentioned, these are long-standing issues that they have had on this facility. Now, the street will wait by to see what happens for the other two plants. The other two are two formulation plants. One is in Pithampur in MP and the other one is Piparia and Silvassa. Both of them have also issued an import alert in 2015. Nomura has a buy and a target price of 1133. They've indicated that the Ratlam side VAI classification is a positive surprise. So it's a big relief. Let's see what happens to the other two facilities. But for a plant having a positive signal from the US FDA after having an import alert on the facility means that they have managed their compliance successfully.
All right, Ekta, stay on. Laurus Labs tumbled over 9% after missing street expectations in the second quarter. The company reported a 22% drop in revenues. The management tells CNBC-TV18 that they expect higher sales in the second half of the year. But brokerages have put out a negative outlook on the stock. Ekta, tell us more about that.
One of the key disappointments for Laurus Labs, where the margins have still come in at around 15-odd%. Yes, there was a Q-on-Q improvement which took place in the margins, but it was still disappointing at multi-quarter lows. So in terms of what the management has guided, they have indicated that higher sales will aid margins going forward. They were quite positive with regards to the gross margins, which have shown some amount of stability, and gross margins will remain similar according to them. In fact, they expect higher sales in the second half, which will aid the EBITDA performance. Now, in terms of guidance, they have not given any specific guidance for FY24. However, they are confident on the second half being better than the first half when it comes to both revenue as well as EBITDA. There were factors such as a higher depreciation due to capex, which really weighed down in terms of the numbers. Overall, however, FY24 is expected to be a year of consolidation, but second half could probably see some more of a pickup. Now, ImmunoAct, that is the company which is an associate company for Laurus Labs. It was in focus a couple of days ago simply because they have launched the first CAR-T therapy in India, which is approved by the Indian drug regulator. So on ImmunoAct, they said that it is currently well funded. They are helping them scale up. They are not looking to hike stake as of now and not looking to buy out ImmunoAct as of now either. No plans for that. Overall, brokers are still disappointed despite the fact that the company is more confident about the second half. Jefferies has an underperform with a target price of 260. They've cut the FY24-25 EPS by 33% and 5% respectively and are 11 and 30% below consensus. Kotak sell target price 270, insipid performance according to them with a big miss across most segments in Q2. And Incred has a reduced with a target price of 307. They've reduced their FY24 and 25 estimates as well.
Ekta, thanks a lot for that. Well, Amber Enterprises tumbled nearly 8% as losses widened in the second quarter to over 5 crores from 2 crores in the same quarter last year. However, the company reported a strong revenue growth. Surabhi Sutaria joins in with more details on that. Surabhi, over to you.
That's correct, so they've seen a strong revenue growth of 24%. The EBITDA is also up 62%, but the margins are at 6.4% versus 5% same time last year. There is margin expansion, but the street was working with 8% EBITDA margin number, and that's where the disappointment is. And that has also trickled down to the PAT, where they have, the losses have expanded, and the street was hoping that this time around it will turn profitable. Now, if you look at their segmental revenues, the consumer durable segment saw a strong revenue uptick of 53%, but the margins were down 40 basis points. Electronic division, the expectation here was the revenue will increase in double digit because they've started working with the brand Noise for the wearable segment, but there the revenue has grown only 3% and margins also have declined substantially to 3.3%. And in the railway and the mobility division, the revenue is down 13% and the margins are at 23%. In the mobility division also, the street was working with a 20% growth and the revenue is down 13%, and that is why you can see that the stock is reacting the way it is.
All right, Surabhi, thanks a lot for that. Well, in the commodity space, globally, gold prices have been on the rise. Since the Israel-Hamas conflict spurred concerns of a spillover in India, the prices are within a striking distance of record highs as the festive season kicks off. Manisha Gupta is here with all the details. Manisha, what's pushing gold prices higher?
Gold prices have been an up move because of three reasons. One, there are geopolitical concerns and that leads to safe haven buying. Second, expectation that you could be looking at lower interest rates in 2024. And third, in last 1 year, the gold prices have given you better returns than various asset classes. So portfolio diversification also has led gold on the higher side. And while we are inching higher, some of the countries and currencies have seen gold prices already hitting record highs. Australia, Japan and China in last 1 week have been looking at higher gold prices consistently. In this year, we also have seen UK and Taiwan as countries see gold prices at all-time highs. For the Indian markets as well, it was in the month of May that we saw 61,490 as an all-time high. Currently, we are trading at 60,500, so just 1,000 rupees away from an all-time high there. In the US dollar terms, the all-time high has been 2,070. We are trading at around 1980 right now, so $1,000 away from that one as well. But interestingly, it is the projections going forward which tell you that the gold is ready to make all-time high in the next year as well. I mean, as you can see, these are all global banks and brokerages, Wall Street banks as well, telling you that gold prices will hit a high at around $2,050 to $2,200 an ounce. I mean, that really seems to be a consensus. But there are a couple of them which also expect that $2,500 an ounce of an all-time high is also what gold prices could be looking at in the next year. So this is the projection anticipating that it's an all-time high coming in for 2024 for gold yet again.
All right, Manisha, thanks a lot for that. With that, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates.